walk you guys through my watch list for this earnings week and going into August because a lot of stocks pulled back and I see a lot of opportunity here. So I'm gonna do a 3 month top down analysis. I got all my levels marked out, but I'm about to walk you guys through all the levels and explain exactly why I put those lines there. We're gonna kick things off with Meta. So I start my top down analysis on the 3 month because I want to see range. I want to see how far we gotten. I want to see how far we are away from the lows or the highs in perspective. You know what I'm saying? Based on the current market structure, we are in a bearish trend. I want to see also if we're breaking a support or coming back towards a level. So this is why I start off from 3 month just to see exactly in totality where we're at in the market space. On Meta, it's clear you can see right here we're in a bearish trend. We have a low right here. We have a lower high right here. So it's pulling back and it's at a support range. So it has to react. Now, with that understanding, here's how I marked it down. This is the all-time high because of this peak. Meta got as far as 790 to 800 in this range back in July on the 25th. So just mark that from memory. And then as of resistance, I'm using 690 as resistance because in as of January, this was a level that got rejected twice right here. This is the first pullback. It reclaimed, got back to that level, but then it became resistance. Boom. Came back to that level, still resistance. We're back down in this range right here. So now I'll go down to my monthly so I could analyze that for like a better perspective. On the monthly time frame, you can see a monthly support right here at 562, which is from June. You can see that low right there. I always mark the tips of my wicks just for a range extension point. So if I'm in a trade, these are my runners. I would TP my runners at these range or hold past this range for continuations. So that's marked right here, 539 as an extension level for TP, max TP. On shorts, of course. Now, go down to the weekly. I'm gonna break this down exactly how I see it so it could be a little bit simpler to understand. Go down to the weekly. Now that I know where my monthly support is, I already know what my 3 month resistance is, which coordinates with that monthly range. Let's go back to the monthly so I can show you exactly what happened to the 3 month resistance during the monthly time frame. And y'all see that area, right? Still got rejected during the 3 month. We go down to the monthly. And we see exactly what happened here. It reclaimed, got above that level, but fell right back through it. On the next retest of that level, it rejected and it became resistance. No longer a support bounce area. So watching the reaction at that level is important. Hold above could take us back up to all-time highs, but based on the current circumstances, it's rejecting and that is resistance. Now, with that understanding, we go down to the weekly. Now I do all this to find a sniper A plus setup that I could get into to get back up to a high on the 3 month or a low. So now on the weekly, I mark this as my resistance because of this chop. After rejecting that 3 month resistance, we pull back, right? This was a breakout for me, right? This candle is very important. This candle could not hold or close above that resistance level, showing weakness right there. So the bears tapped back in and pushed it back down. This candle closing below that low, which these are all weekly candles. So this week closing below that weekly low confirmed bearish continuation instantly for me because On the higher time frame, the volume is a little bit stronger. So you're expecting a hold above for a strong continuation. If you see a hold below, same thing, strong continuation in whichever direction it chooses to hold in. With that understanding, it came and it broke and created a support, right? This is the current week we're in. This is the candle right here. The support of this week is 590. So we are watching that level to see if it breaks through or if it holds, right? In preparation for what happens when it breaks through, I went down to the lower time frame right here to see exactly how I could react to a put situation if this is a continuation to my low. And with that understanding, I created this. We go back to the monthly range. You see that monthly support? You see this box right here? Let me show you why it's there. On the daily, after doing all that analyzing, on the daily, we have a gap right here and a gap right here. Now, usually gaps get filled in the direction they're headed. This pulled back and created a gap down here, and it's nearing another gap. This could possibly get filled for a bounce and a reaction in this zone to come back up to the high of this gap, 625. It's not always going to happen, but it's a pattern that's good to remember if you ever find yourself seeing a reversal in a gap. Now, with that understanding, on the daily time frame, we could clearly see which levels we need to focus on. We're at support, right? We're sitting at support and we're above a gap, and we created a gap down, right? Bearish, straight pressure pushing down. The reaction to this 390 level is going to be very important because you want to see if the candle could get back up above that 609 level for a closure for a strong continuation. Weakness in this range will extend into this gap and possibly leak into this low. So the sniper A plus setup for me would be to go down to the 30-minute and target a break of structure entry. Now, the biggest thing about this is finding out where does structure change. Where does this actually change into, like, okay, extension period. I'm using my same targets. 590, 594 is my extension range, but 590 is my confirmation of weakness. Going back into this range, I could confidently hold below 590 for that entry and TP in this range if it reverses. Now, for confirmation, this is how I will get in. On a 15-minute time frame, I'm gonna structure myself correctly for an entry. It's a swing entry I'm analyzing from a top-down analysis into a 15-minute entry range so you can add your swings at a cheaper premium for a bigger extension. Buying time is my game, so buy time on all the contracts. You can always patiently wait for this gap to get pulled back. You enter at a low once you see a reversal for actual retest of this. Wouldn't rush the trade. Break of this level is my signal, as you would say in the trading world. Entry of this range is my target. Break out from this range would be a call signal for me. Break above 608 would be a call signal for me. This range is sitting in right now as a consolidated state. I want to see a reaction below the levels I just said. 590. And change the structure right here. 597 going into that 608 range for a full confirmation. So I will watch reaction. Here for the cause. That's it. 15-minute entry targets is right here. So throughout the week, paying attention to this range could lead to some easy money. Easy money, easy money. But because we're in a bearish trend, the trend is always your friend. We're following the trend. I'm shooting back down to the nearest low target of 560s, right? I wanted to get back into this gap and reclaim that low. But if it's not going to do that, I want to see it reject and bounce from weekly support before it heads back up. I needed to show that that weekly support is carrying us back up to the weekly high reclaim for that retest level, this resistance back here at 650. That's meta. Let's move on. Let's do MU. Same situation, starting off from my 3-month. Just started trading MU like a week ago, so fresh here, but I'm good at noticing patterns, so I'm gonna break down exactly what I see. I started with my all-time high again, 3-month resistance right here. My 3-month support, because we had a strong 3-month range, this candle is just heavy. That's also good because when we see big candles, we see big falls. So when we start seeing reactions like this where it can't get back above that 3-month resistance, like Meta showed us in the last, then you start paying attention to that bearish continuation back down to the support. 3-month support on MU is 345. We're currently at 820. After hours, it's at 795. So keeping that in mind, things moving $20, $30 a day, $80 a day on the best. Great move. So it's giving a lot of price action to make money in options. 3-month support is all the way down here at 345, and that high, the resistance is 1082. We're going to the monthly because we're trying to find a sniper entry to get back up to my 3-month high or my 3-month low, but I need to see the direction. You go to the monthly and everything falls right in line. You can see a little bit more candles down here. So you see that support get built. You saw the breakout candle. You see the weakness get created up here with the wick. You see the closure below. You see the flush. And it's now back at a reaction level. And that's just the monthly. We go down to the weekly. You can see the same thing, but a little bit better. All-time high up here. See that pivot point right here? Then you see candle closure below, candle holds below. Now support turns resistance completely. Candle holds, creates a consolidated state, creates a new support, reclaims a range where a gap is also. So now I understand that. I'll go down to my daily. On a daily, you get to see a little bit more candles, give you more information. This is a head and shoulders pattern. If you know patterns, head and shoulders are meant to show you a bearish pullback. So you pay attention for the rejection of the right shoulder for a continuation back down. It seemed to do that, but it's not fully back up to that 3-month. But it created a shoulder, rejected, and pulled back. We're in a bearish mode. The daily candle we're currently in is closed below this level. It's at a support, and the next candle, the next daily candle is going to justify if this is a pullback completely or if the structure is rebuilding back up for a reversal towards this shoulder level. How would I get into this? 30 minute. Go to the 30 minute to find the range now. Let's go back to the weekly. I missed the gaps. Every time I see a gap, I call it out. It's money on the table. In this range, this candle is heavy and strong. Usually these candles create gaps, fair value gaps. So if you go to the lower time frame, you'll be able to see exactly where the fair value gap was created, so you can know what range was an order range where orders need to be filled at for a reaction. The range was right here. Once I noticed that, it was easy. I put a range right here. Orders will get filled in this area heavily to react to that gap fill, fair value gap that happened, because they weren't able to get into these shorts. You had to be in a swing to catch these, and you know day traders don't like that. So I'm sure the gap's going to get filled for everybody to get a chance to either flush this market or push it back up. If the gap doesn't get filled, it's already in a mode of continuing back down towards our 651 level on MU. And we go to 30 minutes to find a sniper entry. On the 30 minute, you see more information with the candles. Now you can see the actual reaction. Comes down, rejects our order block high, pulls back, gaps down, holds below, holding structure. All we need to see now is a continuation back into this range. That's why I pay attention to the reaction, because this is an order fill area. But we leaked into another gap zone down here. Alright, so now that we're down here in this gap zone from right here, this is a bigger support. There's more orders that could get filled here, so they could buy it up or they could flush this market heavier from this range. This is the gap down showing weakness in the trend up, right, after this lower high was created. After this lower low was created. Now, if this comes down and it breaks this support, we're back at this range. This range came from 636. So all I need to see is a break back into this range and a break below 750 for a confirmation of continuation back down to 650 lows possibly on MU. And that's just from a 30-minute perspective. 15 minutes, you can find a sniper entry that's more in the money. The in the money direction for me would be, watch reaction, break the structure at 785 will confirm everything I need to know. For a pullback, my stop loss would be 818, 820, and I would just let that contract ride. That's MU. I'm gonna do one more. I got Tesla. I'm giving you guys my best stack for the week, just because it's a lot of tech going on. It's FOMC, and I like this AI bubble thing. Easy money on the table. Tesla, let's start from the 3 months so we can see where we're at in the range. All right, the 3 month high on Tesla is 498. Marked it up here. And you know I have to find my support also. Where's my support at? My support came down to this range. 296, right? Because from that structure point, it broke out and created a point for it to continue to a high, right? Pivot point would be right here for me. Confirmation of bearish pullback started as this candle held below 443. And from that point, it flushed it and it creates a resistance. You can mark that right now as 3 month resistance. candle bodies. Like I said, the wicks are for extension points, so the candle body only, 3-month resistance, pulled back, came back, confirmed a dump from here, right? So after this came back below this level, this candle was created on the 3-month, and it wicked and came back and went bearish. The break of these lows was really a super confirmation of a pullback. But from this perspective, this red bearish candle is why Tesla pulled back so heavily, especially without giving it a chance to reclaim this level and get back up to the highs. Now we understand that. We go down to the monthly and see what type of new information we gain from this. On the monthly range, we don't gain a lot of new information. All I see is exactly what I kind of sense from the 3-month. A range right here was created as support. Broke out from right here. So this was the entry candle. Continuation, boom, boom. Pulled back and created a new support. And it TP'd at a high of 501. Pulled back. Came back to that support where it was supposed to hold for confirmation of continuation. It created a resistance, right? Then it comes back, it needs to hold again above. It created a second bearish candle, then went back to confirming the resistance here. Now that second confirmation of resistance changed the trend. It flushed. Boom. We go down to the weekly and see how the weekly got affected by this. You can see the pattern now. Boom, boom, boom. Resistance, came back. They tried again. Resistance, dump. Now on the weekly, you can see an earlier entry here. If you notice the pattern, pull back, support, turn, resistance is right here. This support became resistance right here. From that point, you're paying attention. Let's say you missed it, it pulls back, it comes back to your resistance point. It holds above. This candle has you questioning. It pulls back, this candle opens on the weekly, opens green, starts pulling back, goes below your resistance, holding, closes red on your weekly candle as a bearish pullback, right? Next few weeks, it pulls back. This week right here, it comes back to your resistance again. Now, have you been studying the pattern enough to add or sell your whole contract? If you're paying attention, you want to see if a candle closes above to confirm a continuation, just like this candle did. But if you are impatient, you just sell because it broke your resistance, you stopped out, or you probably stopped out down here. Now, this rejection was confirmation. This candle closure below here on the weekly again was another confirmation, and the puts went straight to it. Now we finally broke this mid support it created. Go to the daily. See how the days reacted. It reacted exactly how we explained already. Filled that range, came back. They tried it a few days and rejected and dumped, right? Now we're back here. What can we do from this level? From this level right here, I will watch the reaction to this range, right? Because now that we're pulled back, we're in a consolidated state. You're waiting to see where the magnet leads us. We have fair value gaps above us. So like I said, they could come back to that range, but you want to see confirmation before you take that call. So you wait for the reaction to the support, right? At this level, this will be a resistance point, another resistance point, another resistance point, and this will be my near support on the 30-minute, right? So now that we're in this range, I want to see a break above 309, 313, and a hold, a candle closure above 313 on that 30-minute to 15-minute candle time frame to actually confirm a continuation back up to 325. But 325 is my major extension level. Hold above 325 could take us right back into the range that got gapped through and left money on the table. The high of this range is 368. So I'll pay attention to 315 for a breakout, 309 first. So closure above 309 first for a breakout. But if, like I said, the trend is your friend, if the market continues to do exactly what it's already doing, and the trend extends itself with more volume towards the bearish side, we will get a break of support here at 304. We will get a closure below 304 on a 30-minute time frame, a candle closure, right? And that candle closure is going to be the most important of them all, because that could take us right back down to 300, 295 range. That would be my TP on puts. An extension would take us back to 258. Based on all the pressure AI is getting right now, that's possible with Tesla and SpaceX IPOing and not meeting their earnings and stuff like that. So that's something to keep an eye on. Yep, that's it. That's 3 stocks that I'm paying attention to during the FOMC week. It's a lot of volume coming. I'm tracking tech and AI throughout this whole year, and I'm going to show you guys exactly how I profit off of these charts. 3-month top-down analysis. If you want me to do any stocks, comment them below. I'm going to add them to my next video, and I'm going to walk you down on what I think. This is not financial advice. It's just my perspective on the market. PTU. See you guys next time.